everybody, Dr. Realtor here. Today is May 30th, and I am going to first of all review the last session about the real estate taxes. And just to kind of summarize that a little bit, there were a few questions and I want to address those first. Thank you for watching, first of all, and thank you for liking or subscribe on YouTube, Facebook, Instagram. And I'm just going to jump right into it. The real estate taxes. I had talked a little bit before about how important it is to know and understand the tax process, especially when dealing with scenarios where you're either buying a property and owning it as simply primary residence or whatever, or if you're investing, if you're selling, you're wholesaling, whatever the situation is, just the general understanding of the tax process is really important if you're going to be in real estate. So I want to touch on that subject. As I had said last time, location is one of the most important factors of real estate, but taxes is, in my opinion, in my professional opinion, one of the second most important factors. If you want to know a little bit about me, get the book. It's coming out soon. I want to announce that also. The actual Dr. Realtor Real Story Untold will be coming out August 1st. So I want to throw that out there too. But anyway, and other information as far as like my bio is actually on the website and in the initial YouTube video. But let's jump right into it. I am a retired real estate appraiser, 4 states, also 30 years in real estate in general, and investor, you name it, I've done it. Okay, so let's talk a little bit about taxes today. In review, I had touched on the importance of basically understanding the fact that when you, as a wholesaler, you touch on or you mention the capitalization rate when you're talking to other investors. You know, the general process is basically, taking the expenses and, dividing it by the sale price to get the capitalization rate, or the sale price divided by the expenses to get the capitalization rate. And the thing that sometimes is left out is the taxes. The taxes is very important because it depends on where that property is located and what the tax amount is. Pretty much can make or break the deal. And I've seen it myself, especially here recently, where that part was kind of forgotten or just not known as a newbie, or an inexperienced professional out here, whether you're a wholesaler or a sales agent or just a beginner, period, homeowner. And just not knowing that when you give that information that you have to have everything enclosed in that. And just trying to give more education. As you'll hear me say all the time, education is key. Knowledge is power. And if you're going to take this profession seriously, get your education. There is so many videos out here on YouTube, and there's people telling you about how to get rich quick, but the true way to get rich, stay rich, build wealth is education. Like I said, making sure that the tax calculation is included in the capitalization rate, and understanding that the second point was when you sell a property for a higher amount, which I see a lot of that going on, it has to be noted that those taxes are more than likely going to increase, and vice versa, the reverse. And I see investors not including and not thinking long term as far as that goes when you're purchasing a property, that I bought it for $50,000 more than the previous owner had, because they may have done some updating or whatever the case, and not taking into consideration because of the increase in that sale price, that when the assessor goes in and completes that new appraisal and sees that that market value is a lot higher, your taxes are going to increase. So just one of the things that I wanted to also point out in consideration of like future values. I know we're good as investors at going in and jumping in and doing an ARV on the property and not really thinking, long term, that after I make these repairs, or after the repairs are made by someone else, whatever your situation is, whether you're buyer, seller, wholesaler, investor, that the taxes are also going to increase, and it is a very important part of that formula when you're considering long-term cash flow. As investors, that is usually our most important factor because we want to look at the bottom line. Something else in line with that I wanted to review is the actual ability as a investor to pay zero, little or no taxes long term as a asset holder when you're buying and selling properties, or you're just selling properties as a wholesaler. I think a lot of people are not thinking long term, especially in a situation like this where property values are elevating and escalating and going down and changing, that you need to buy assets. As my sister Lynn Richardson, and I'm always referring back to her because I absolutely love everything that she's doing right now, and that she's done, period, as far as trying to get all people, especially our people, to have home-based businesses, to have assets, to build assets. And the only way to build true wealth is to allow yourself to have assets and to build equity in those assets and to be able to basically benefit from the depreciation that comes from having rental property. There is a depreciation process that will allow you to not pay taxes by having assets. So I'll give you an example. Say I have a four-suiter and I am getting a $2,000 a month rental amount on that, and I have 30 years to depreciate. Over 30 years I can depreciate that asset, and as far as the IRS goes, they're not concerned about those rents at the end of the year. But sell that four-suiter and get capital gains on that four-suiter, and you'll find out, wow, I am paying 30 to 40% taxes on that property because it is no longer an asset. Whereas if I had held on to it and I kept it and I did as I always talk about, 60 to 70% refinance where I'm leaving equity in that property. I'm not draining it. I'm burning, no way, not the traditional way anyway. And I'm leaving enough equity in there for times like this. And if and when I do decide to sell it and take that net and roll it over into another property or into a self-directed IRA or 401k, I am not paying taxes. I am not here to give you tax advice. I'm not an attorney. I'm not an accountant. But I am here to give you education on a simple process that will save you a whole lot of money later on. There is also something else I wanted to touch on about making sure that you consider your PITI when doing your property as an investor or a homeowner, and that is your principal, your interest, your taxes, and your insurance. I have seen some loan officers, pre-approved individuals or pre-qualified individuals, and you can refer to, I would actually say, MG the Mortgage Guy. Awesome, absolutely awesome when it comes to anything as far as mortgages go. But knowing that, getting with someone who knows what they're doing so that they don't forget that important addition involved in pre-qualifying you and pre-approving you for a loan. Because, like I said in my last video, if you live in an area like I do, my tax amount, my monthly tax amount, is almost as much as my principal payment. So it is very important to include your principal, your interest, your taxes, and your insurance when you're considering purchasing a house. Purchasing a house is so much more than just how much is my principal payment going to be, or how much is my principal and interest going to be. You have to include those taxes. So those were the three things that I really wanted to touch base on again and review from the last video and make sure that everyone understood and received those principles and those a little bit of real estate Dr. Realtor T on taxes. Okay, we're going to move right on ahead, and today I want to talk a little bit about the rent for June. Should or should I not pay it? I'm not here again to give you legal advice. However, just information and education. Okay. I just wanted to say that the rent, first of all, moratorium that is allowed right now through the CARES Act is temporary. And I just want people to understand that when you allow yourself to get put into a situation or backed into a corner, is what I'm thinking of it as. You have to be ready for what is going to happen in the future because of that decision. Now, I understand that some of us cannot pay our rent. Some of us cannot pay our mortgage. We are in a serious crisis. And to take advantage of the current situation as an absolute, altogether, last resort, totally understand. Do what you have to do. Time is the healer of all wounds. You can worry about the results later. But for those of us who are just a little bit greedy and deciding that, guess what, I'm going to jump on that too so I can go and buy sunglasses and high heels or cars and t-shirts, whatever. Pay your mortgage, pay your rent, because I don't want to see you in a quote-unquote trap type of a situation where come October, November, or whenever this thing is officially over, you end up losing your home. You end up getting evicted. Or, best case scenario, you screw up your credit. Because regardless of what they're telling you, I know firsthand that when they say they're not reporting this to the credit bureaus, this is exactly what they're doing. You will pull your credit after getting a forbearance, and you will see a note from the credit bureau or from your creditor, your lender, your mortgage company, whoever it is, that says natural disaster victim. Okay, as if that is not a hint enough that you basically are screwing up your account, they are not reporting that particular account that month. I'll give you an example. Say I have a loan with a particular company, and I decided, oh, it's a natural disaster, they have this great forbearance program, and they're not going to just defer it for a little while. They're actually going to put it on the back of the loan. Why not? I get to not have to make payments for a few months. Well, I go back and I look at my credit, thanks to Credit Karma and some of the other free services, and I see a comment that says natural disaster victim under that account. From that account, this is what they're reporting. Okay? And when you have an account, an open account with an individual, they report monthly how you're doing. Basically a 1 for good or okay or whatever, depending on what credit bureau they're reporting through. But if there's no reporting that particular month, and your credit algorithm has been accustomed to including that individual account, it is going to affect your credit score. And don't let anybody tell you that they are not. The same thing with these, oh my God, SBA loans. I don't even want to talk about that. That's a whole other story. But the same thing with those scenarios. It is affecting credit. It is doing exactly what I don't believe Congress intended for it to do, but it is. And so just know that, it's like that old saying, there is no free lunch. There is no free forbearance. There's a cost involved in it. Whether or not they're doing what a lot of YouTubers have been saying, and it is true, that they have, if you defer it for 3 months, the 4th month, everything is due. There are some banks that are actually doing that too. So, and it's absolutely true as far as the renters, unless something changes with this next bill, that you may not be able to get evicted right now. You may not have to pay rent right now, but you will have to pay your rent unless my suggestion is to communicate with the landlord, property management company, owner, whoever it is that you pay rent to, and try to find out a compromising, negotiative, equally balancing, situation that solution basically that will help both parties and to be able to move forward, because right now we should be trying to help each other. We should be trying to solve problems, and we should be trying to live in as much of a peaceful environment as possible. And I think it's very important to have that communication and make sure that you stay on top of it. And also keep in mind that depending on what state you live in, this non-payment of rent that is being allowed is only good right now through July 25th. So you have to consider the fact that if you did not pay April, May, June, July's rent, that eventually you're going to have to pay it. And I don't know what anybody's financial situation is, but I know myself, if I went without income for several months and I went without paying my mortgage for several months and I had to pay it all at one time, I would be homeless probably. So I don't want to see anybody get into a situation like that. So I wanted to emphasize on that today. That was the whole purpose of pretty much putting this video out here. I know there's a lot out there that get really complicated on the actual terms and techniques, and a whole lot of crap that me myself I didn't care about and would just zoom right through it, and just wanted to get to the point and give good pointers and good information on what is actually available to you, whether you were looking to pay a mortgage or you were looking to pay rent. And also for renters, I wanted to also say, and mortgage payers, that the act is set up to basically support and help those who have the Freddie Mac and Fannie Mae backed loans. And there are sources out there for you to research and find out if you qualify. There's so many out there. Just your simple locality, just dialing 211, and they can direct you in any state and let you know whether or not you qualify for that. And that's for landlords and investors also, depending on what type of property you have. There's something even available out there for commercial properties, and I think we should utilize that depending on, like I said, who you are, how much you're suffering. But just keep in mind that effect on the credit, and that eventually it will have to get paid. There's no free lunch, and we live in America, let's just face it, the richest country in the world, but we still have to pay to stay. I did try to go live today, having technical difficulties as usual, but I will try again on next week, next Saturday, same time, 3 p.m. I hope you join me. Dr. Realtor here, just saying stay safe, wash your hands, regardless of what you're hearing on the news, regardless of what you hear about masks and gloves and whatever. In a situation where your life is at stake, it is best to be safe than to be sorry. And also remember that if you're here and you're tuning in, I thank you. I thank you for getting educated. I thank you for being prosperous. I thank you for trying to pursue your dreams and to increase your education. Okay, I'll see you guys next week.